What's up? What's up? What's going on, traders? I hope you're having a fantastic day. The market is rallying a full bounce after the data at 8:30. Today is February 2nd. I go by the name of Spark. You can jump into my Spark and Trade Discord. And what I provide is just a couple of different levels in the morning. I do a pre-market show. You can check that out. And we'll run through, why those levels are important. And I only care about the daily and the 4-hour. Macro levels, 1 hour and 15 minute on the chart, because I'm only trading the 5 and the 2 minute. Sometimes I look at the 1, but I'm also trading the tick chart. So you'll see the setup. And I think that it's worth just kind of realizing how often the market reacts from these macro levels and how to kind of enter the trade if you think it's gonna play out. Now, I think I've been working on this edge or this strategy for over 4 years. It started off initially as a project to code because I was an emotional trader and I didn't want to be emotional. So it ended up becoming something of a passion. Anywho, we'll get right into it, and you'll see how, we already know a lot of my concepts, a lot of my lingo, the money zone, the supply and demand levels. That's where the market's going to react from. Let's narrow everything down into we're taking longs at demand, shorts at supply. And now how do we enter that, or how do we anticipate that it's a good time to enter in order to, capture a move? So without further ado, let's get right into it. So this is the current market condition right now. Excuse me. Just do something really wiggly. Usually, I'm not sure why that background isn't working, but let's just keep it moving. Usually, I don't trade with a trend line, but we're just gonna keep it there, for shits and giggles. But I'll walk you through my macro setup really quickly. So on the macro screen, every morning, you'll probably see me watching this right here, which is a 15-minute and a 1 hour to pick out levels, right? And this was a key level this morning. So you see this purple kind of area here on the 15-minute chart. Then up here, it was another key level, but we were below it. So we broke above this 15-minute level. So I'm going to go ahead and move that back up here. But that becomes a really strong gravitational, direction that the market wants to go and touch or test. We were all the way down here. So we did have a 15-minute level a little bit below it. And that's the one I chose because this 15-minute demand was not straight. All right. And since it's not straight, it could continue to keep breaking down. And if I could spot some other area where the market reacted to, I'm going to try to pretty much call that level out. So essentially that level was 473. Okay. And the market did exactly that. It broke this level, pushed down into 473, and we started seeing a wick. Okay. Once we see wicks at key levels, you're not the only genius with this plan. I think you have to think about the market in that kind of sense, right? Like, is there anyone else that thinks that this level is worth buying, right? And a lot of fundamental traders will say, well, yeah, we had such a big move. They took it back during a non-farm. And, this is pretty much a discount for anyone who missed the earnings, right? And it is, if you really think about it in that sense. But I've seen the market say, I don't care. I want to take everything back. And we could have ended up down here. So I don't really necessarily care what you do. That's a level that I'm going to either play or stop out at. But let's see how and why I triggered into it, right? Because we just don't want to jump in there because we just see a wick. That's evidence. But now let's get into, it's also a money zone, right? This green zone here is coming from the daily, right? And the daily is saying that a big boy could step in down there. So you might want to pay attention. And we do this in the pre-market all the time. We color the zone for the daily. And then we have a 4-hour zone right here. So we clearly broke through the 4-hour zone and hit the daily. So another confluence, right, for a long. The trick is trying to be patient for it, but let's keep it moving, right? So we get back into this chart, and once I have all of that mapped out, I don't need to look at 10 levels. I just need to look at where the market is at. If it hits there, I'm thinking long. If it breaks down, might think shorts, because that's a big daily level, and my shorts might be short-lived. But I could take the shorts if I'm a scalper, right? Maybe not necessarily a swinger. Even if I was a swinger, I'll stop out because of this volume that came in. And after that, my mind isn't really thinking about like anything other than if and scenarios. Well, if this breaks, then, you know, whatever. But I'm looking for this wick, right? And I'm looking at it on this kind of dynamic chart, right? We can take my window here. Jesus. Take my window here, right? I got the right one? I think so. Yep. And move it up here, right? Because we're going to get to that. So, and we probably I could have shown you this price action stuff live, but all right. So the 5-minute is at a demand level. More confirmation that someone's buying it there. There's a divergence going on at this level. We got a demand coming in. Look at the 2-minute top left. More confirmation that buyers are stepping in at this level. We're moving sideways. I like to see that. That's more evidence that the market can potentially bounce. I don't know if it's going to happen. Don't really care if it happens or not. But now the opening bell happens at 9:30, and I just kind of want to be patient because that volume is insane, right? We all know that volume can either make or break your morning and make you want to just go and throw the computer through the window. So, all right, here is your 9:30 price action on the 5-minute right here, this candle, right? This big wick candle. And here is your 9:30 price action on the 2-minute, right? Now on the tick chart, you can really see the battle that's happening in the market around that level. So here's your 9:30 open right here. Before we even get into it, here's your 9:30 open. Now, a lot of traders could have said, this thing is going to go. I'm putting my entry in. My stop is way down there just in case they break that level. And it is what it is. And that's not a bad idea, right? Like, it's just a trading style. But I incorporated this tick chart with a trail stop of almost 5 ATR, which usually ends up being 10 points on the tick chart. Okay. And I'm comfortable with that type of risk and taking enough MNQs to kind of get a good portion, get a good meat of the move if it comes, right? Now, I don't just want to jump in there at 9:30, but this is a good bullish condition to support my thesis that the market could bounce somewhere down here, all right? So we know the top-down analysis that we do every morning, right? So and I do that in like 5 minutes. I know what I want to do when the market opens. If it shoots up without me, hey, it shoots up without me, but there is a way to get in. If at some point I said, yo, I want to take this condition where it's cyan down here, and I'm going to flip this because I like purple to go up and cyan to come down. But at some point when I say, oh man, I want to take this bullish momentum, the bulls are in control here. From a demand line on a tick chart, we have demand on all the other time frames. I can take this pullback with a really tight stop and make almost like 8-point stop, 19 points. So it's a little over 2R, right, on that trade, if I can capture all of that to the upside, right? Maybe scale out one at 8, maybe another one. Now, if you take an NQ, that's some really good money, right? Almost $400 to the upside. If you can ride that all the way up there, is 20 points. And then if you don't make it, you stop out walking away with like 6 points, maybe a little bit less, 3. So it's a break-even trade at its very best. And a lot of the times, what I found about my trading style is I was the trader that will give it 20 points. Go ahead and take me out at 20 points, but I'm taking this dip. And then I'll get my 20 points, my 1R, but I'm trying to shoot for 2R, and this happens. And I don't know where the bounce is going to be, and I get taken out only for the real rip to happen. And I'm not mad at anyone that does that. Maybe I should spread it out to 100 points and just let the market go. But I can't, right? Account sizes are a factor when we trade, and risk management is something important. And if you've ever seen any of my videos, I will get into a trade like, oh, I'm wrong, next, right? And this kind of assists me in that. And if I get hit with 3 bad trades and it doesn't run, I think I need to just like, all right, that's it. My day's over, or just slow down, take a walk, maybe come back, catch another bull run or whatever. But as we keep it going, so the rules are take the 4-hour money zone, which is simply you can create an 8 EMA and a 20 SMA, and everything within that is where buyers are waiting for the market to return after it rips, or after it dumps. That's like a pullback entry type of strategy. And I always would say, it pulled back into the money zone. If we're in a bearish or a bullish condition, that's your enemy if you're going to take a demand or supply trade. Meaning when you get up there, if you're taking longs and you have to get through some bearish trends, the bears are waiting for that price to kind of for that level to get hit before they enter. Or let's just say a lot of bears, right? A lot of orders should be there. But it doesn't mean we can't break out, right? Like, this is what we trade, supply and demand. So we don't really care if it rejects. Just don't take me out, right? So top-down analysis, 4-hour daily, get on a 1 hour, find some major levels. And since we knew this level down here, we waited for this condition to finish. This happens, and I'm like, oh, this thing could rip, right? Meaning the bears took over on this little push. Supply came in on a tick chart, knocked this down. Now notice, I'm not even really looking at the 2-minute anymore. All I want to do is see if volume comes in on a 2-minute at this point. Is there anyone else down here, right? Like trying to catch a dip. This candle goes down all the way with this momentum, and then boom, the wick happens. And we're up here with it, right? So the wick is like right here, this candle on the tick chart. And now I have to decide whether I want to get in or not, right? And if that candle turns white on the 2-minute, this is a new feature of the code. I implemented whenever there's unusual volume, whether it's bullish or bearish. So if there's more bulls and bears in that candle and it's a higher average than the last 30 bars, paint that thing white. If it's more sellers than buyers, paint that thing blue. And you're going to see why this is kind of important and a great added feature. So we have the macro outlook. We have the 1 hour, 15-minute demand zone down there, right? We have the 2-minute, 5-minute demand zone down there. And all we need to see is volume, and the tick chart show us that is go time. So the go time signal is the fact that this trailing stop flipped from bearish to bullish. Once it flips from bearish to bullish, I'm thinking to myself, well, wow, this might be where, buyers come in. So I'm looking now, paying attention. And a lot of the times you can draw a trend line on this rejection of that supply, and a break of that, if it triggers that white candle on any other time frame, someone's stepping in, and they have way more money than any retail trader. Okay. So this price action right here, if you see that first pullback, they're buying again, they're buying again, they're buying again, they're buying again, or at least that's what you want to see. You want to be involved in that buying, because when institutions step in, and this is something I heard from the guys over at SMB, once again, shout out to them. Shout out to Mark Douglas Trading in the Zone, because this is also helping me kind of want to hold trades. And you'll see that I didn't trade as aggressively this morning. But anyways, when they turn on the buy button, they don't really care about price pulling back too far. They don't want it to. They just want to grab it as cheap as they can. And down here, we're as close to that level as possible. So the market starts to go, right? I have my conditions for entering the trade here. I like to enter when we break this supply, so I know we're not going to just chop around down here. If this supply holds, the very first pullback tells me, go. Just don't think about how far this stopped. So normally, right, I would avoid this trade because the stop is all the way down here. Okay? That's a pretty big stop. Pretty big stop. 31 points. You probably only would want to take one contract. But if this thing is saying you don't really need to go down there, the standard deviation right now on the tick chart is five standard deviations. This isn't like no 2 that they're going to just wick you out and go. You're giving the market 13 points. So now we need to go at least 26 points, right? And that should be somewhere around here roughly. So boom, I get into the trade, man, right? I see very little drawdown, 2 points worth of drawdown. This money zone right here on the tick chart, I want to see them cross above. This is another key, very key component factor in this trade stop. You got all the macro stuff. We're not going to go through that again. We want to see the market get above this 200 on the tick and explode. Like, don't even give anyone a chance to get in. I used to suffer from trying to, like, I would just be a deer in the headlight and miss this entire move because I just didn't know how to get in. Now, I'm going to show you 2 different ways that you can get into this market. Any pullback that survives this trail stop, jump in there. If you could risk whatever that point is, just risk it. Because if this happens, you're going to be a victim of, damn, I can't even jump in here because it's just ripping. So boom, let's keep it moving, right? Market goes crazy. I'm like, holy shit, I caught it. Let me get out. So I got out, but I only had 1 MNQ contract. So that pissed me off. I'm like, yo, if this condition stays true, I'm jumping back in, right? And I've already did like some pretty decent trading overnight testing this thing yesterday as when I, saw this kind of condition. And now I would always tell my groups that if the tick chart gets above the 200, you need to pay attention to that. Pay attention to that. You're not going to get a chance to get into this thing. And we're going to see it live. Right now, it's actually happening. You can see it on, this particular bull run over here. Yeah, definitely happening. Yeah, so this particular bull run over here, and it's just, it's gone. And so there's a few key psychological things I want you to think about, right? The institutions don't care about price. You have to get in there some way, somehow. And you want to be a part of that squeeze, okay? Whoever shorted, they're fueling the buying. Whoever thought that whatever demand was going to break, they're fueling the buying. And that's why I never take, breakout levels, or at least very selectively. But they're fueling the buying, right? You're fueling the buying. Retail that sees that demand. Macro level, institutions will fuel that buying. The bots will trigger and fuel that buying. So you have a lot of buying pressure down there. All you need to do is see it trigger, and we have our mechanisms for that on the 2 and 5 minute, and also over here on a 1 minute. Like, every chart is going to do it, okay? So this is the ad, and it shows you that there are some significant buyers buying dips. Okay, so that's another added component. I also have a tick chart. I did a video on that. Definitely take a look at it. I think there's 2 ways you can use the tick, and shout out to LMD Trading. We would always just go back and forth about what I learned from those guys over at SMB Capital, and they need a few different conditions to be true for them to actually execute a trend trade. And as I'm watching this over the course of a month, that's not necessarily the case all the time. Like, the market could continue to rip, but one of these lagging indicators or these indicators may not, be in that condition that they need. But if you see this thing in action, and that's the only time you want to trade, and you create some sort of signal for it, it could be amazing. But like I said, shout out to LMD, because LMD will buy this dip because it's below a certain level on the tick chart, especially if it's below 500. That's when the market pivots back up to the upside. So if you're in the right side of the trend, you want to be buying these dips, right? So I coded this thing here where it will turn green to tell you where a good opportunity to buy would come in from, right? So maybe that one wasn't so great, right? But you never know if the market's going to rip. But then this one comes in after we get the confirmation at a demand level. So you add these little components to it, and you can really, really increase your accuracy, right? And you guys will see this in a second. I don't want this video to be too long, but let's get back to the strategy, right? So we know that the market is going to possibly explode from that level for all the reasons that, we kind of listed before. And the tick chart is starting to give us the condition where we want to get in there. We got in there, boom, we make it up here. I didn't have to stop, could have had another leg, and then I would have stopped out around that area anyways. Now, when this happens, what I am learning is maybe you want to give this area right here, right, this void, an opportunity to develop demand because you're in a bull run, right? And if you get out of this trade that literally went, it went, what's the point on this thing? I don't see. Back it up, back it up some more. Pull it over here. It went 107 points before I really had to stop out. Just trying to, or 111 because they broke through the demand here. But every single demand that came inside that void is the second opportunity that I was going to tell you. I tell you, once this thing kicks off, there's two ways to enter the market. It's in a push phase. And if you ever traded with me, you know what that means, right? I use these terms that kind of corners the market condition. So I know how to like enter with the right psychology. So when the market is stuck above the Bollinger Band, it's in a push phase. It's going to be the hardest thing to get into, but that tick chart provides an opportunity to get in. I won't talk about what these two lines mean, but basically there's a divergence happening. And when the pullback happens, you want to get out of Dodge. But if you see white candles, buyers continuously are overwhelming sellers. And that's the only way the market could move. They're willing to hit the ask and move the market up. So this is what that looks like on the tick chart. I had to figure out a way to get in there without getting slaughtered if they decided to, pull back aggressively on whatever amount of size contract you take. But this is what you will never miss a trend if you can capture this. And it's not going to be easy. Don't ever let a trader tell you any edge is easy. It's going to be very hard because you're never going to know which one to take, right? But that trend line stops you out before you get slaughtered, especially when you get a good push away from it. If you got in this morning, that trend line, right, that trailing stop gets you out of this slaughter, no drawdown, only to be right. So then that's another psychological component of trading where you don't have to really deal with it. Just accept that loss. Because over time, you just need one of these. Not even all the way up there, but I got right back in again. Oh, they still going. And then I started becoming a chicken. I jumped in here, right? And I was trying to catch this dip. But I'm like, if this thing is going to go, it's not going to give you a chance. And look at the pullbacks. They're very shallow. They're relatively like 5 points. Right? Like what? But you got to think about it in probability and in risk. If you ever caught it, you're really risking about 8 points to make whatever it is this bull run could give us. And you'll see, like throughout the day, this thing just plays out. So we get going, get another, Bollinger Band pullback. I get out of there because now I'm just like nickel and diming, and I'm up almost like 180 now. So I'm like, oh, they're still going. Like, right? A demand came in. This is your second opportunity to enter and hope that they defend this level for another leg up. So we're like really seeing with the tick chart, the pullback condition on the charts here in a push phase right now. Okay. We're going to see what a money zone pullback on the 2 minute looks like. And that's when we get all the way up here. Okay. Market comes back down, gets another demand here, shoots back up after, a kind of brief pause, keeps on running, gets us that condition again, comes back down, holds above the 100 EMA, right? If we're away from this, there's a way to get in there. The market's pushing, so it's not going to, if you get stopped out, just get the hell out at the, maybe somewhere in here. Like don't take, or give it this room. I don't know. Whatever you're comfortable with, this risk, if you got in somewhere right here, is 20 points. I'm comfortable with that. In order to get 20 points to the upside and be a part of this move in a push phase, you never know when it's going to end. And then this thing right here triggers, and now you can trail it. You're catching the dip, very small risk if you really, choose any one of these, and you're making 20 points. So it's a 1 hour trade. At least that's a 1 hour trade right there, and maybe more up there. Then this condition starts to change, right? And look at why. The straight line comes in, a blue candle comes in. We talked about what that means in terms of volume from the sellers being so aggressive that you may not want to hold on up there, right? And if we go into a 1 minute chart, you have more evidence of that kind of playing out. So this is that area right over, I think we're coming up on it. Let me see. Yeah, so we went too far. So this is this area right here, right? So this, I'll highlight it so you can see it on the other chart. But basically, the 1 minute has a supply, and then this has a supply. So you know that you just want to see sellers at this supply. Why is this supply important? Look, there's a purple condition right above us. That's a 15 or a 1 hour supply level. If we take the chart back, right, we kind of been knocking our heads up here since the pre-market. All we do is trade supply and demand. We could create conditions and a play from that. We don't need to think about anything else. Don't need to think about whether seasonality is going to bring this market down in February. We don't need to think about whether or not this supply is going to get broken. We don't need to think about, well, what if these bulls just, then don't take it. But we'll see what these added confluences can bring, right? So we have all the macro levels here to support this trade. And then a micro starts to come in, right? All right, so let's get back to the chart and the tick chart to see how do we get in there though, right? Because that's the hardest part for traders. How do I enter this trade? Well, as soon as that supply came in on the 2 minute, we had a condition change here, and that wasn't the case during any of this bull run on a 2 minute. Okay, so we know that we may take a trip or push at least away from this. This becomes a really elevator down kind of condition. You can take it when they break down that zone, right? That you're right, or you can just jump in there. It's all about the risk, right? So the risk here, about 9 points there. The break of the zone at the time, it was 11 points, and immediately it's a risk-free trade. Immediately, it was a risk-free trade. And you just have to trust and follow that, because if you don't, you're going to get out right here. I made enough points, right? Like, and this thing says stay in, stay in, stay in. And now you're all the way down here at real reasons to get out. Now, if you look to the left on the 2 minute, we're at a money zone on the 2 minute. Everyone that missed the trade to the upside waited for this. Okay? They waited for this very patiently. And now what do? We're taking a money zone trade. It's not a supply and demand anymore, but you could consider it that if you just look at maybe a smaller time frame. Yep, a smaller time frame, but that doesn't come in till a little later. So on this time frame, the supply doesn't come in till over there. So that's a retest, more confluence. But some traders are aggressive, and if I'm kind of an aggressive trader, if I see two. And I took this trade. If I see two demands and then this condition flips, remember, above that yellow, above that 200 SMA. So if I see two demand lines and this condition flips, and we're looking at price action. Oh, it made a lower low. All right, when is it going to stop? Oh, there goes a higher low at demand. Okay, there was a higher low tier 2, but normally you would get stopped out. Or if you jumped in here, you would get stopped out. It's okay. You could jump in right here. But that's why I wait for two demands sometimes. So now I say I'm going to wait for a pullback. You're not going to get me in up there. All right? Because now my risk at the time would have been not bad, 10 points again. Or yeah, about 10 points. But if I would have taken any of these, it would have been a little bit more, right? So maybe the same. Who knows? So the market comes back. It's flirting and hesitating at this line. I'm like, grab four of them things. Or maybe I just grab, I don't know how many I grabbed. But this one, I got out immediately at the supply line. What are you doing? What are you doing? This thing rips from this condition. 30 points. I must have taken 10 points, 1 hour. Not even. My risk was very small, so it was about 3 points. Like, take the hit. All right? Take the hit. And I was willing to, but like my P&L just kept climbing and climbing and climbing, and I'm running out of there. But either way, now watch this. Don't ever get married to your hit rate, because if you do, you'll be taking profit, a little early. And this edge says, get out over there, 23 points at most, and your P&L is even exponential, and it's still a good trade, a winning trade. just because of this edge, right? So above the 200, what are we looking for? Them to kind of survive at this level, and they did. And then it was just a chop fest. They kept blazing. But if you held this trade through this, you managed to get a little bit higher. If you held through this, you managed to get an opportunity to get out at a double top with 2 red bars. And if you look left, this is the area where we fell from before, right? This is the area where we fell from before. So you could choose to gamble for the breakout or not, but stop out at some point because now you're back to square one. So remember I said on a 1 minute, it picked this up. You could jump in again somewhere up here in anticipation of the break of the 200. It does fail. Get out, right? Break even trade. All right, cool. Because this thing moves your stop up immediately. And I love that about it. We're going to see some really cool conditions later on when the bulls start to like take full control. But some sellers are getting out. Some people are trying to short supply. They're getting squeezed. Oh, bring it back down. And here goes another condition. I probably would have waited through all of this and then jumped in right here. I think I missed it because I don't see any arrows there. And now I'm like, oh, I got to take this. We're above the 200. And it's not necessarily squeezing. Like if we look at, if we look at price action during this kind of condition, I think we were right here. It's not really squeezing. We're not even at the top of the Bollinger Band. But it's a play, right? It's a play nonetheless. Doesn't get stopped out, moves up. Get the hell out of there right here. That's money. Shorts come in with a blue candle. You already know the drill. Underneath this, so somewhere in here, breakdown of a supply line. You could ride this. Hopefully this doesn't get you out because you want to see the opposite. The sell signal, right? Like the sell supply to come in right there because most people that miss the drop, they'll probably come in. Or maybe there's more like pullback that they wanted. And then down here, something very, very interesting happens. If you look to the left, we make it to the bottom of the Bollinger Band on a 2 minute. Let's move up to 5 minute so we can see that we're also at the 5 minute money zone. So everything in here can give you a play, but the hard thing is not flipping size all day, right? Like you could take shorts, you could take longs, but if you were just waiting for longs, that's all I took, no shorts here. They came in again, and now I'm like, yo, now I'm in my cash account. So I can take way more like risk versus my 100K. And that's a whole another psychological level. I would take, that was before I even had this edge though. Now everything is so defined that it feels like, oh, all right, I'll take that paper cut. No problem. It's not 20 points, right? So I'm taking 4 contracts down here and I don't even want to touch NQ, but it would have been $1,000 trade with NQ, a little bit over that. So boom, they do what? Get above the 200. I know what I want to see. They survive, right? We've seen this before. It starts to become a repetitious process, right? We know what we want to see. We know what we don't want to see. And we're out of this trade if they break this regardless. So I put my stop a little bit below it. Market comes. I actually got in here because I thought that I missed this pullback and I thought it was going to go. So this is important because a lot of times we don't get into trades, but I said I'm going to add. I added on that pullback consolidation, and then the trade hesitated, and then boom, they broke this level, and that's it. That's a retest level now. Boom, this is a retest level now. Boom, and it just kept going. So I have targets to take money out of the market, and I'm going to start. I didn't have this trend line, this trend channel in here, but this could be my target zone, right? So I'm going to target this zone. That's going to be almost like 2R trade right here. This trade went like 8R because the risk was so small. Pullback came, survived that, next exit right there. And I think my final exit, I was like, I'm ready to go. Like this is such a free trade. So I'm following it now. And then when we touched it this time, I got out on this pullback. Okay. And that was it. That was my 4 contracts to the upside, just taking some profits as I go. And then this one was the banger because this trade went 50 points. That's the average type of points I want to capture. So I stopped trading, kind of started enjoying my day, locked in about almost $500 day in the cash account, and I think a $280 day or something like, no, a $218 day in the Top Step account. So I'm building that account, getting some cushion before I even decide to like really go heavy with NQs in here. although today would have been a $2,000 day, it went like my normal setups or my normal trading kind of like targets. Got to be a little bit smarter with these accounts. I honestly do not think that if you start a combine, if you take NQs, you're a part of the YOLO gang. You want to pass that thing very quickly. You don't want to pay the monthly fees. Your psychology is probably just like, I'm taking MNQs and I'm successful. Like, let me step it up. The problem with that, and we have this conversation all the time, is that you don't have a lot of ammo. The market is going to move. You have a proven edge, you can capture some of that move. But if you're wrong, and I'll show you a time when I was wrong. If you're wrong, it's gonna clap you. In fact, I was wrong. I wasn't wrong. I didn't take profit. So I'm in this trade, right? Take the shorts. Boom, we hit a nice little RR trade. And I'm seeing this and I added. I'm like, oh, this thing's gonna fall. Dude, we're at the money zone. It's not gonna fall. Right? Or we might get some buyers here. So as soon as I saw the buyers, I should have cut everything on this pushback down, right? Like, just kill the trade. Instead, I killed it up here, and that's why I had to wait for a pullback. But I could have killed that trade as soon as I saw this. My entry would have been even better, right? And I could have rode this thing all the way up to the moon. So, it's important to like, that would have been a $600 loss. It was like over $600 or $700, $60 or $70, just taking 4 MNQs down there. It's like, what? Take that. Take that. I used to give the market 20 points with 2. That's an $80 loss. So my psychology when I trade MNQ is just a lot better. The account, I could have done this all day. I could have got blazed in the chop. One of these, you make it all back. So it's important to kind of remember that when you take these accounts. But if you're a trader that can capture this within Q, kudos to you. I will be that trader because I'm going to stop out with a $200 loss. But if I hit this, I'm making $600 to $1,600 with some insane accuracy. So, and we know what we want to see, right? This push away from the 200 in an up move. And, occasionally you get these fake outs, but get out. If you get this move for whatever reason, like we're back at the highs, we're back at the yellow line, the orange. So that's a 15-minute supply. 15-minute supply. And the market starts to reject that, right? So if you took the trade to the downside, you capture some move. Took the trade to the upside, capture some money. Took the trade to the downside, capture some money, a lot of money. Took the trade to the upside again. Why? Same principle from before. We're at the money zone. This is when it says, all right, I'm done. I'm done playing around with you guys. Trapping all sellers. That was this move right here. Boom. Get a nice little run up. They stop you out, come back in, give you a pullback, stop you out up here. And again, you don't have to stop out, give it to the 200. Maybe you stop out there for a loss. You get back in from this condition. You're not afraid to get back in. You know the condition is true. Just get back in, and then the thing runs up, right? And it's still the same money zone area on the 2-minute and the 5-minute. So that's another added confluence. And we just need to take out the supply that's forming on the other side. And then you want to see this. You want to see demand come in between the hot zone, and you can survive this or get back in. And now we have the same condition, guys. I think that's what the most important thing I want you to get out of this video. I'm going to wrap it up because we're about to approach 40 minutes. Is when you find an edge that you can, create step-by-step guides to get in. And I mean, I got a lot of different things here that I can show you, but I'm not thinking about too much. You give me this condition, I'm in the market. Especially if I know I'm getting white candles, right? Or green candles. But look at this. This is where the chop fest happened. And you want to look where I got in, white candles. That's where all the oranges are at, right? Like orange pushes are at. And this is a cyan condition. I know what I'm looking for. This is a cyan. If cyan turns into green, it's a goner. And so I think the one thing that you should get from this is that the condition for the 200 to move away, for the price to move away from the 200, it doesn't have to be a push phase. You can see that it's giving you some optimal opportunities because it's not quite in a push phase yet. Maybe it is up here now. Yeah, it's stuck inside the Bollinger Band. So look, it's not an easy entry here unless you look at a tick chart. That 2-minute, it's not even touching the money zone. It's gone. This thing might go for all-time highs. Okay? So with that being said, guys, this is just really basic supply and demand trading. but utilizing a very micro 200 tick chart time frame with a trailing stop to capture momentum when it starts. You clearly see why we believe the momentum is going to start, because we're getting above the 200 on a tick. And if we lose, we're losing small. But if we win, my God, 50 points to 100 points, and you're a part of that push. When I used to take, before I implemented this, I'd be so afraid to touch this. I'm like, oh, by the time I touch this, it wants to go down to the 200, and it's a big cut. It's a 20-point cut. So I'm like, when are you gonna jump in? All right, let me jump in now, and then it goes all the way to the 200. But then I implemented that demand line, and then I implemented the 100 EMA. So the code has evolved. I was using the 200 tick, but I was using it with a 50 HMA. And if I put it here, you're not going to take trades because of another moving average saying, don't do it, only for it to pull back and bounce. So I try to eliminate a lot of different things from this code. I think if you look at it from a 2-minute perspective, just play the supply and demand levels. Demand was down there. Now you're all the way up there. If you can capture that. If you miss this move, you got a couple of lines here that you can use. Stop is below there, and that's moving up, right? Hopefully you survive that, or maybe you get in there. So this was the last thing in terms of psychology that you want to see. When you draw a channel and people are willing to buy a pullback higher than where the price launches from, it means that buyers are willing to literally buy higher than where they saw the market this morning. I, as a trader, try to eliminate that, but understand that I want to see that price action. Just like the 200. Look, the 200 here. Oh man, I didn't get in down here. Okay, so when it pulls back, try to find a zone. Try to find a position to get into this market. You have all this supply here that could turn into demand. Maybe wait, maybe this higher low. You're like, okay, I think it's going to happen. Maybe you take this because you're an aggressive buyer. And you see this. You see, it's respecting the trend line. And by the time this higher low gets formed, that trend line is formed. Okay. So we have the price stuck in this range, but it's moving up. Moving up. And if you took this, that could have been your first target. If we get a slip, this thing is going to all-time high. I have nothing else. This is a void. There's no other price levels between this thing. All right. So it might continue, might not. But with that being said, check out my daily videos live. If you can, like and subscribe. I will try to put out more content with edges, right? Like real edge out here, because I do think that we as traders should just discuss that. It's not focus on our P&Ls. Every trader deals with greed. Every trader deals with, fear. Every trader deals with, oh man, I didn't get enough. Over trading, we all deal with that. That's going to be a personal journey that you have to go through. But we can discuss edge and talk about what a trader can tweak a little bit so that he doesn't have to pay some guru or maybe a guru tons of money to tell him something very simple, right? Like, hey, look, maybe you should use less contracts. Oh, thanks. That cost me $1,000. That's crazy. But I'm not out here to bash anyone for their hustle. I probably will never charge anyone for anything that I do. If you want to join this project and help me kind of find more edges in this market, please reach out. Drop a comment. We have the Discord. If you need that new link, because I know they always give me a new link or they always delete the old link or whatever. I'll give it to you. But if you know me or you trade with me, I use indicators. I believe in statistical probabilities. So I'm going to use the indicator, but I'm not going to use it if I have no use for it. Now, you might find use in certain indicators, and you may be able to teach me how you use those indicators. But that's the dialogue I want to have. Hey, but what about in this condition? Without anyone feeling, offended by anything. It's not that deep. We're all here to learn and trade and profit with proven strategies, and not just because we're already dealing with the emotions. So let your edge and the idea that over time you will be green by the end of the month because you have a really successful win rate, then take that L, be happy about it, just keep it emotionally small. And I'm not one to talk. Don't let me tell you, I went tilt a few times in this account, and this is why I build it back up. And then I'm like, all right, let me try one NQ. And then immediately I'm like, you're a friggin' idiot. So again, I go through it. Never tell you that as a trader, I'm not like down. I've been down $6,000 and I made it back way too many times for me not to have like felt the gut punch, right? Like way too many times to not have felt that. And it's not fun. It's probably not something anyone wants to deal with. But at the end of the day, we're traders. And this is real capital. This is, even if it's fake capital, like I think people still feel it, but they don't feel it as much. People take more risks. They go on tilt more often, whatever. But the idea is to get that edge and capture it. And, hopefully you can be a part of a community that isn't so caught up in, P&Ls or egos about their edge versus yours. But even when you share disagreements in conversations about what you see versus what they see, then, it could just be, cordial. But for me, I can show you, these blue candles are smacking. Why is that code relevant? Like, it's volume. These demand levels are kicking ass. The supply level provided 3 opportunities to take shorts. We broke out, retested, and it went. Like, I need to see what you're telling me. Don't tell me that the market's just going to go up. I don't believe that. I don't know. Look, a cyan to green, jump in there, right? Like, I can show you this over and over. If we're trending, the market will do cyan to green pullbacks. If that thing turns red, you might want to boogie. Now, maybe you'll get caught in a fear candle situation. I altered the code to avoid that a little bit more. So even in certain conditions, if X is not true, it'll still stay cyan. But generally, if the trend, like for example, here's what I mean. Like, I could show you this shit. If the trend is red, this shit should be red. The candle should be red, because that's just what the code used to say. But I said, wait a minute, man. If this condition is still the case, I need you to be blue. Get red when I really need to get out. Because then I have a psychological thing saying, oh, this market's going to keep dumping. And it doesn't. So you want to go with the trend first before you go against the trend when you're so far away from supply. So these are things that just become a built-in kind of, extra factor. We're pushing up on an hour. I want to keep this really, really basic. If you get the move from here all the way up there to that green line or all-time high, congratulations. Even though you think that this thing is over, let's go to the tick chart. And you could have captured this next. I can guarantee that it flipped. Right? So I'll still get in here. Not really excited about getting in that supply. But if we get a decent pullback, I believe in this demand. Stop is right there. Still above the 200. Okay? Even in this case, right? Like, depending on where you put your stop. Once this flips, it's going to be a harder, where do I put my stop kind of condition, because you don't have this to lean on, okay? And if you don't have that to lean on, then you need to create a real stop. Don't let them break through this, because you know what can happen, right? So, the market is very irrational, but at least we can see this move, right? See this move and participate in that move. See that explosion away from the 200. But without further ado, like I said, please like, share, subscribe. Once I look at the macro, this is the only, screen. Oh man, I'm over here showing stuff that isn't really happening. So I was basically saying, when you see this, you're good. Look, that demand pullback, I said maybe I wouldn't get in up here, but if it gets to demand, I'll take that, because my risk is now small and I'll be in profit already. And if it hits me, it hits me. But this is a harder condition to get into, because your bears are in control, right? Theoretically, right here. But we're still above the 200, so you can get that bounce. Maybe you're an aggressive trader. You counter trade that micro fade that the bears think that they're about to win, and you get the move back up. I don't know. But those are different edges that we can talk about later on, guys. Thanks for watching. I hope that you gained some insight about this very, very unique explosion from the 200. and this is again years of like trading. This isn't something that I didn't learn from another trader. Shout out to Oliver Velez. He's an extremely cool guy to listen to on YouTube. He speaks with enthusiasm, clarity, and he has one edge that he swears by. If the market 20 moving average gets above the 200, you take longs and strap on. And lo and behold, if the market gets above the 20 moving average on any time frame, someone is buying with more money than us retailers. So maybe it's important to create an edge around that. Maybe it's not. I don't know. But at the end of the day, if I see something happen over and over and over, and I can consistently make money from it, man, I'm taking that. So yeah, Oliver Velez, SMB Capital, LMD Trading is a group that I'm in. We all talk about different edges, strategy, market psychology, et cetera, et cetera. Spark and Trade is my channel that I'm posting the daily levels on. So you'll see where the market is possibly going to catch some smoke or a bounce at. Top Step is another group that I'm in, and it's a very active community. Shout out to Coach Jay, Ray, Dakota. These coaches like really transformed how I viewed this. It's hard to get out of a scalping mentality, but it's worth the fight. Once you say, yo, I don't want to just keep having to get into this market, or if that's your style, go crazy. But there's no way that I'm going to just sit on the sideline and miss this move just because I'm afraid of getting whacked. So, you look at a bigger time frame, you take a position, and you have that mindset. You can either, like me, I scout my way through the upside. Every time that stop, I'm out. But if I held from the lows, I didn't even have to go. Excuse me. I didn't even have to go all the way up here, but from zone to zone is good on the 2 minute. And then we did it on the 15 minute too. But just to wrap up, man, because I know this is something I keep saying, this right here worked out to the T. And now that you have a bullish money zone condition here, I think this thing went like 1 or 2R or 5R from your risk if you caught it at the lows and you were patient enough to do it. And now it's coming to retest you, right? This is real trading. Like, you got to make a decision. Oh, do I leave? Do I leave? Do I leave? Don't leave. Let them stop you out. Because if this thing explodes and now your fill is a little different, your R&R is a little different, and then that trade might be the one that, gets clapped. So without further ado, man, y'all, peace, love, and light. Holla at me, man. I'm going to do some work, man, with some real traders out there who have like some systems. There's a lot of different things in there that I didn't talk about. I'll leave it for another video. I've been working on a divergence kind of on the chart indicator, so I don't have to look at the $ tick. But until next time, guys, peace. Happy trading. Be safe out there.